We were talking about the housing market here, some 15 minutes ago or so. Shari Olefson is a real estate attorney and author of Foreclosure Nation. She joins us now. Shari, good to see you. What are you anticipating with regards to the housing data this week?
Good morning, Louisa. Well, housing data is looking very healthy now. We had, like you mentioned, new home starts were up last week about 20%, which is awesome news. Existing home sales are also moving up month over month. But when you dig a little deeper, there's a little bit of an underlying troubling trend, and that is a trend that is sort of entrenching home rentership as opposed to home ownership. So, for example, with those home construction numbers that came out last week, we know that even though new starts are up by 20% from last year, single family permits are up by less than 1%. So we're seeing builders seeing more opportunity in renting, and it all really goes back to an affordability issue. I mean, housing is just becoming more and more unaffordable for more and more Americans.
Note that you state a third of housing is less affordable now than what it's been the entire century.
Yeah, and that really goes to purchase price, but there are multiple components to affordability. For example, rents now are so high that in about 80% of U.S. markets, renters are having a hard time saving a down payment. So we have the saving up portion of affordability, then we have the actual closing, the purchase price, like you mentioned, but then even ownership. For example, local and state governments are so in the hole from the last few years that they're looking to increase their tax revenues, and they count on property owners, local governments at least, for about 75% of their tax revenues. So even that is becoming a bigger and bigger onus on owning a home.
What happens if rates go up, Shari?
Interesting question, and that too goes to affordability. If rates go up by about 0.25%, we may see literally hundreds of thousands of Americans being priced out of home ownership. We're already seeing an interesting trend, though, Louisa, with sellers starting to offer to buy down the rates, even though the rates haven't gone up significantly. So I would expect that trend to continue, and folks will just find other ways to deal with that. We may, for example, see a reemergence of new adjustable rate mortgage products as rates go up, but clearly that's one more component of affordability. And the other problem for the broader economy is when builders are building, we mentioned between 400 and 500 thousand new units a year, but when they're building rental apartments, those units cost about a third less to build, and they actually add about only a third of what a home would add to the economy. So you're talking about less jobs, you're talking about less consumer spending, less in revenue, which is why even though construction is moving up, we're still missing hundreds of billions of dollars that housing would normally add to the overall economy.
Shari, thank you very much for being with us. Shari Olefson,
have a great
real
week.
estate attorney. Thank you. Likewise, also the author of Foreclosure Nation.